Tesla stock is down about 5% today, and there is a lot of news that we need to go over here in this video. For all Tesla investors, this is a very important video. So let's get right into it. Hit the like button. Subscribe to the channel if you want to make more money, if you want to reach financial freedom as quickly as possible and stay up to date with everything happening in the markets as well as with Tesla stock. Let's start with another downgrade from another bank, this time Goldman Sachs. Analyst Mark Delaney took Tesla shares down from buy to neutral, but they also raised their price target from $185 to $248. And essentially, they're saying the same thing as other Wall Street banks that have recently downgraded Tesla. The valuation concern. That's the only thing that they can say negative on Tesla. But let me tell you right now, if Tesla's deliveries beat expectations in the way that I expect they will, and you don't see any more price cuts, you're going to see margins improving. That's going to lead to more profits, and that's going to lead to a lower valuation. And once markets catch on to that, I think there's a lot more upside from here. Speaking of deliveries, Deutsche Bank is flagging China as a segment of strength for Tesla. And it looks like Deutsche Bank's Emmanuel Rosner just updated his delivery expectations to 448,000 vehicles from his previous estimate of 438,000 vehicles. Analyst consensus is at 445,000 deliveries. He also lifted his price target on Tesla from $230 per share to $260 per share. But financial media is not going to talk about that. He also raised his second quarter revenue projection $500 million from a previous estimate of $23.5 billion to $24 billion. He goes on to say that 43,600 European registrations came online from the start of the quarter through May. So April and May. While more than half of deliveries in Europe are typically delivered in the last month of the quarter. So probably going to be pushing close to my estimate of 100,000 deliveries for Europe. In China alone, quarter to date, you have seen 130,000 insurance registrations. And if this continues, Deutsche Bank is going to raise their estimates further for Tesla in China. Not to mention, he says North American Model Y deliveries could be solid, though Model 3 volumes could see some sequential volume decline. In other news today, Warren Buffett has sold $86.3 million worth of BYD stock, dropping his overall position by over 10%. Investors are scratching their heads because it looks like Tesla is seeing some solid numbers. It looks like BYD is seeing some solid numbers as well. Why is Warren Buffett selling shares of BYD? Does this mean trouble is brewing? Potentially things will slow down in China? That's what the markets are getting out of this. And that is helping Tesla to fall about 5% here on the day. Now, Tesla stock is not alone in seeing some of these downgrades. Your biggest runners so far of 2023 starting to see some downgrades, such as Apple, Google, as well as Amazon, and really all of your stocks that have ran quite a bit. And that's because odds are we're not going to have a second half of 2023 that is as strong as the first half of 2023. That is a big reason why, again, Tesla stock is down, as well as the NASDAQ. The NASDAQ is down 0.60% today, whereas when you look at something like the Russell 2000, your small cap stocks, they're up 0.66% today, because what you're actually seeing is portfolio rebalancing. Now, what is portfolio rebalancing? It's essentially where hedge funds and institutions, they want to stay call it 25% tech, whatever their number is, 10% or less in individual stocks. Well, when positions go up and they go up 100% in a year, the percentages also go up. So if a hedge fund wanted to stay 25% tech, well, if their position has increased 100%, maybe they're now 45 or 50% tech. So they got to bring down some of that exposure. That is really what you're seeing today, and that is something that is affecting Tesla. Again, this is a big reason why Cathie Woods just sold another $7 million worth of Tesla. It doesn't mean she's bearish. It just means Tesla has risen a lot recently, which is a good problem to have. If we take a look at the option activity with Tesla today, given the stock is down over 4%, you would expect to see more negative positioning. In fact, it's pretty neutral. So far today, you have seen almost 1,200 orders from hedge funds and institutions with a positive order value of 53%. What positive order value means is, imagine it like this. It's a percentage, right? So if you put $100 into Tesla options, $53 of that $100 went into bullish bets, and the other 47% went into bearish bets. So not as bullish as what we have seen recently, but not super negative as well. Not what you would expect to see after a 4% decline. The dollar amount that is heading into Tesla options today is worth $256.22 million. Keep in mind, short sellers continue to have massive short positions on Tesla, with the current total for short positions sitting at almost $23 billion. This is potentially a problem for hedge funds heading into July 2nd. That's going to be the date that we get delivery numbers. If delivery numbers beat expectations, Tesla stock is going to rip higher. If expectations were too high and Tesla's deliveries come in short, then the stock's probably going to fall. Now, with a short position this size that has increased 40% in the last 3 months, it makes sense for short sellers to cover or reduce some of their bearish exposure heading into July 2nd. So I remain confident that this is going to be a bullish week for Tesla. Just again, today, you were seeing a lot of big tech profit taking, a lot of downgrades on big tech, and portfolio rebalancing. And that is not helping Tesla to go higher today, since Tesla has rallied quite a bit from $100 per share since January. Take a look at Tesla's technicals. The stock did fall under 250 today. That was a big support level. So that's not a positive thing necessarily. But you have seen a golden cross recently, and that is when the 50-day moving average crosses above the 200-day moving average. And you're about to see the 100-day moving average also cross above the 200-day moving average. So this typically leads to stocks going higher over 90% of the time. Typically, a golden cross formation does not lead a stock to fall. And that's actually what you've seen so far with Tesla. Tesla stock has dropped about 7% ever since this golden cross has happened. So odds are, if statistics are correct on a golden cross, Tesla's probably going to rally from here. Now, this is quite healthy, what you are seeing with Tesla. It's not like the stock is falling a lot. You're consolidating. You're getting some new position taking. And the RSI has fallen down to 59.63, meaning that the RSI is essentially at neutral. You're no longer overbought. And this means that Tesla stock could rally to a new high of the cycle without the RSI being a big weighing negative factor on the stock. Meaning that Tesla could rally to $300 or higher before the RSI got back to 90, like it was just as soon or as early as June 20th, just 6 days ago. So I think the odds are that Tesla goes higher from here, can make its way to 290 or 300 by potentially this Friday. This drop today makes it a little bit more doubtful just because the whole sector, again, technology, is getting sold off today. It's still a possibility though. Now, if deliveries beat expectations, you're going well past $300 per share. That is almost a certainty in my mind, especially if Tesla does come in with closer to 490,000 deliveries, in which that is my personal estimate for Tesla. Now, you're also seeing some economic data coming out today, and you're going to get more economic data throughout the rest of this week. So I can't sit here and tell you with certainty I know what the economic data is going to come out as. I don't know. It's uncertain. You're going to have durable goods orders coming out tomorrow. That's going to come in at 8:30 in the morning, as well as the S&P Case-Shiller home price year over year and month over month. Richmond Fed data coming out as well, like manufacturing index and the services index. Those will also be important, as well as a big 5-year bond auction from the Treasury. All of those things will be very important. Fed Jerome Powell does give his first speech on Wednesday at 9:30 in the morning. So right as the markets do open for trading, if he says something different or changes the narrative on us, that could mean some downside for the markets. And then as well on Thursday, you are going to get initial jobless claims, consumer confidence, pending home sales, more big bond auctions, and Fed Jerome Powell at 2:30 in the morning. And this because he's speaking in Europe. And again, if he says something that is new information, markets will react to it. Now on Friday, that's going to be the big day where you get core PCE month over month, personal income month over month, personal spending month over month, PCE price index year over year, and PCE price index month over month. Across the board, we're expecting PCE to fall by about 0.1% from the month over month readings for the headline and the core, as well as the year over year. You're expecting that to fall from 4.4% to 4.1%. So you're expecting some softening inflation data. Personal income as well is expected to fall from 0.4% to 0.3%, and personal spending is expected to fall from 0.8% to 0.4%. So kind of bad signs for the consumer is what we're expecting on Friday, but better inflationary data. What we got today as far as economic data is the Dallas Fed Manufacturing Index. Now, the manufacturing indexes that we've gotten reports on over the past year, they're basically all in recessionary territory. They're basically saying that the economy is in a manufacturing recession. Today's number came in at negative 23.2. You were expecting negative 27. So this could be a reason why tech is getting sold off a little bit more aggressively right now. And some of your cyclical companies, some of your companies that revolve around cyclical growth are doing a little bit better because the Dallas Fed Manufacturing Index did get a little bit better compared to the estimates. Now, some of the potential risks out there to Tesla in this rally this week that I still think is coming again is this. NVIDIA stock is down. Blame Tesla. The AI sector is being grouped together as one. NVIDIA, Tesla, other AI companies, they're kind of moving in sync. And this could make for a potentially bad situation. If AI stocks besides Tesla go down, that can help drive Tesla down as well. Now, the biggest potential near-term problem would be a miss on deliveries. That is what would really cause Tesla stock to fall from here. But this week, I think you have to reduce some short exposure if you are massively short in Tesla. Does that mean the stock couldn't fall further tomorrow or the day after? Absolutely not. The next level of major support is going to be a psychological support level around 230. Now, there is a little bit of precedence for this. This was where you got rejected from on June 7th as really the high of that day. You came down the next day and then ripped higher the next day. Like literally, you went down and you seen a very strong day, a 4.5% day on June 8th. So there is a little bit of recent precedence with 230, and that would be the next level to the downside that I would be watching here. 240 as well. You might find some support there. You could bounce off of there and continue on this upward trajectory. And that's kind of what I expect to happen, right? I do expect by the end of this week you end on a strong note, as you just have to reduce some exposure heading into a big catalyst. Let me tell you right now, if you've ever bet against Tesla, this will resonate with you. Don't bet against Tesla. It's never a good idea to bet against Tesla. A lot of people do, and a lot of people lose a lot of money. In this case, shorts are down about $13 billion last we knew because they bet against Tesla. And that is never going to be a good decision to make, at least not anytime soon. So that's kind of what I'm expecting. That's what I'm looking forward to. It's positive. Again, the RSI has reset. That will give us room to make a rally higher. So that is it for this video, ladies and gentlemen. Hopefully you learned something. If you did, hit that like button and subscribe to the channel. Get yourself free stocks, link down below in the description of this video for Webull, as well as come join the trading community. You'll get access to all my trades in real time, as well as tools that will be added to help your trading journey, as well as a live news wire as well. And some of the best trades can be made off of news that comes out in the market. So that is it for this video. You guys enjoy the rest of your day, and I will see you in the next one.